Hello, everybody. Welcome to the Anomaly course, Core Content Lesson 3. Here we're going to be covering invalidations. So firstly, let's cover what an inter-candle reversal is. So this is essentially when within the current candle, it creates the refined key level to actually reverse from. So instead of looking within the previous candle's range for a refined key level in the upper half of its range, within the same candle or the current candle, we actually create that key level. And that key level can only be a swing high or low, right? So here you can see price opens low first and then creates a swing low, right? This would be a relevant low. And as you can see, it's printed or it's forming in the upper half of that. And as you can see, it's forming in the upper half of that previous candle's range. And this will be our key level to form the protraction phase of this higher time frame candle. And as you can see, once price engaged with it, once it's manipulated, there you go. There's your refined key level, respecting the equilibrium in the upper half of this previous candle's range. And if price does not respect that key level, then your whole trade idea is then invalidated. Now let's go ahead and cover some chart examples covering invalidations. Firstly, we're going to be covering intra-candle reversal. So remember, this is where we have a C2 candle or any type of candle closure, and you're looking for continuation. You mark out the EQ of the previous candle's range, like so. I'm going to mark out the wick because it's a C2 closure. And this is where you will not find a key level within the previous candle's range. So what's going to happen is you're going to have to create a key level within the same candle. So let's go ahead and drop down to see what that looks like. So here we are on the 4-hour. And as you can see, there is no 4-hour gaps within the previous candle's range. So now we're going to drop down to the hourly chart to see if we can see anything there. And as you can see, all we have is this low and maybe this gap here. But we do not really use hourly gaps for our refined key levels. We like to use swing highs and lows on the hourly and gaps that are on the 4-hour. So what we're going to have to do is price is going to have to open low, create a low to reverse from in the upper half here, and then we're going to use that to reverse from. So let's borrow play price. Okay, boom. We create a relevant swing. As you can see, the space between these lows. And when that is manipulated, this is going to create a protected swing, right? So as you can see, if we borrow play price, we're going to have an SMT divergence here with ES. And notice how this is in the upper half of the pre-scheduled range. So this is perfectly respecting creating a small wick on the daily time frame. Let's go ahead and look at ES really quick. As you can see, ES takes that low. Perfect, right? So that can be our established low of the day. And if you play price forward, price expands as this is capping off the protraction phase of that daily candle. And let's say price did not manipulate this low. Let's say it did something like this, where it traded into it, and maybe it failed to manipulate like this, and then we created another swing low. Okay, boom. Now this becomes your invalidation level because we're still within the previous candle's range. As long as you have a clean profile, like this day is just more so opening low first, that can just roll over to the next session to be a reversal profile. So you can still move the goalpost every time we create a swing low. As long as we're not coming deep down here, that's the only concern you should be having. So now let's go over the refinement sequence. So step one is going to be marking out equilibrium of the previous candle's range as your first invalidation. Then we're going to take it one step further by looking for a key level in the previous candle's range. As you can see, here we have a relevant low. Now, once price engages with that refined key level and then prints a C2 candle, then we're going to refine it once more by marking out equilibrium of that C2 candle. Once price expands away from that C2 candle, you're going to wait for a key level to print. Once that key level prints, that key level is now your new refined key level. Once price engages with that key level and forms a C2 candle, you are once again going to mark out equilibrium of that C2 candle, and that becomes your new refined key level. As price should be expanding away from these key levels, right? So you have a C2 candle into this low. If we're going to truly reverse, we're going to respect EQ here and expand, right? The price is truly going to continue from this gap. We're going to confirm it by having the C2 candle, and we're going to expand to C3, respecting equilibrium. So this is what it's going to look like when we're aligning the 4-hour with our 1 hour / 30-minute time frame. Picture this as the 1 hour 30-minute. This is obviously the 4-hour. But when we engage with a key level to form the high and low of day, what are you going to ask yourself? Does the current 4-hour candle support expansion? If it does, then you can trade this reversal to expansion candle, right? And this key level is going to form the low of that 4-hour candle. And this swing formation is confirming that, right? Once it expands away, right, we get that 4-hour candle closure. Look within the EQ of this previous 4-hour candle, right? Look for a refined key level within the upper half. What do we have? This gap here, right? Once we engage that gap, form a C2. Oh, look again, it's forming the low of this 4-hour candle, just like we did down here. And again, this is now your new refined key level for this whole entire 4-hour candle to continue. And when we put it all together, this is what it looks like, right? Truly a thing of beauty, honestly. Very mechanical, and it's just a great way to align the time frames together in a repeatable process. Now let's go ahead and cover the invalidation refinement sequence. So step 1 is to have that candle closure. So here's our candle closure. You're going to mark out EQ. That's your first invalidation. Now what's our next invalidation? Is going to the lower time frame and looking for a key level within the upper half of this bullish expansion candle. Let's first go to the 4-hour. Okay, here we are on the 4-hour. We're going to be looking for gaps in the upper half. So boom, perfect. We have a gap right here next to that daily open. And as you can see, price does not tag it on this asset, but if we go to ES, it indeed does. That's what we want to see, man. We want to see these key levels have SMT divergence there, which is an SMT fill, where one asset tags the gap, another one does not within the correlated market. So we're going to move this because this is not our invalidation anymore. EQ here of the candle's range. It's now this gap is our invalidation. So as soon as we engage with this gap here, let's go to lower time frame. All you're waiting for is to price to create a swing point on the hourly or 30-minute time frame. As soon as we create that swing point after engaging that key level, this gap is not your refined key level anymore. It's actually this C2 candle's EQ, like this, right? And if it kind of closes back in the range like this, you can actually mark it like this from the closing price to the low of the candle. So now we want to look for, again, a key level within the upper half of this candle's range up here, right? We're going to drop down to lower time frame and look for our refined key level. So let's go down to the 5-minute. So if we're here on the 3-minute, it doesn't matter if you go to the 5-minute, 3-minute. I don't think it matters whether you're using a 30-minute swing point, hourly swing point. I don't think that matters. They're essentially the same thing. And I also don't care which time frame you're using for entry. You know, if it's an hourly swing, you can use a 3-minute, vice versa, 30-minute swing, 5-minute. Doesn't matter, in my opinion. But as you can see, this is the previous candle's range. And notice how we have already retraced into this range here. So really, we could just expand at this point, right? As soon as we get this CSD, boom, we get that CSD. Now, what is your invalidation level? It's the low of the CSD, right? Because that's what you're going to be entering off of. So boom, you enter off of this, whether it's the close, whatever. And that's your invalidation level. Now, as price plays out and expands away from the initial swing points out of the key level, that's when you get new invalidation points, right? So you have candle 1, candle 2, candle 3. So now just waiting for a key level to be created on the 30-minute or the hourly or even the 15-minute. And that's going to be your new invalidation level. So boom, new invalidation level right here on the 30-minute or the hourly, whatever prints first. Here's the higher time frame. We're always going to use the higher time frame over the lower time frame. So boom, we have an hourly gap here. And now if we're going to continue throughout the day, this is our refined key level. So let's go ahead and play price. So as you can see here, this asset does not tag that gap, but ES does. So this low is 4 o'clock. As you see, 4 o'clock gap does get tagged there. So again, what are you doing as soon as we hit that key level or create that SMT with the key level is you want a swing formation. So dropping it down to 30-minute. Boom, you got that swing formation right there. So again, this key level is not your refine invalidation for continuation within the daily candle. It's gonna be this here. And you can even go crazy with it and use a 15-minute and have that as your refined key level, right? Before these candles even close. You know, it's all up to you. So we can use this right here, right? As soon as you get the C2 candle, right? This is EQ is your invalidation level. Look for a key level up in here. Let's drop to the 1 minute if it'll let me. Okay, it does. All right, do we see anything here clear? I have this gap right here. Let's see if you tag that gap. No, we do not. Maybe there's a 3 minute. No, 5 minute. Okay, there's really nothing that clean, but if there's something clean, that's what we'd be using. I don't really see anything clean there. Maybe there's an SMT in lower time frame with like swing low or something. Okay, this is more of a better example actually. We're gonna use ES here. Here's your C2 candle. We look back in that range. It looks like we have a 1 minute gap here. So this is your invalidation level. The swing low is in EQ or below EQ. That would not be good. So as soon as that gets confirmed, boom, you can enter this trade like this, assuming that the low of the candle is put in. And we're just going to target that external range liquidity rate going from internal to external. Doesn't matter how the trade plays out. It's who cares? It's more about just going over the logic, right? But as price expands away from our swing point, what are we going to create? Gaps in price. So 15-minute gap, right? It's no longer this is your invalidation point. As soon as we create this gap above our swing point or after price does that, this is our invalidation level. So you're going to look for, SMTs with this gap. I don't think there is any. So you simply, none of these assets trade to the gap. So there's no SMT, there's no way to enter that trade, but that would be your invalidation level. So as you can see, we're just moving the goalpost over and over. So now let's go over what an intra-candle continuation is. So this is essentially within an already existing expansion candle. Price will open low, put its low in, expand away. That expansion away creates a key level. In this case, we're going over a gap. And if this candle is going to continue expanding, this gap has to essentially hold, right? So this is going to be your invalidation to know if this candle is going to continue expanding, right? We have to respect this gap to continue. Once it's respected, we can assume that this candle is ready to continue again. So here is essentially the same thing, but using swing highs and lows as your key level. As you can see, price opens low first, prints a low of the candle, expands away, then consolidates. So we know if this candle is going to continue, we have to manipulate the low. As you can see, it does. Once it does, then you can assume this candle is ready to continue that expansion. Now let's go ahead and go over an example of continuation validation using swing highs and lows. So as you can see, this is a reversal into expansion candle out of a fair value gap. So now to drop back. So now to drop down to lower time frames and see if we can see a relevant swing within this candle for continuation. So here we are on the 15-minute chart. And if I mark out that 10 a.m. open, here it is, right? It opens high first, small wick, expands away, enough from the open where it's creating that expansion candle. And as you can see, it falls short of this overall low. So we know that continuation is probably likely for that 4-hour internal to external. It has the wick to potentially get there. And as you see, price retraces back in the range and engineers a relevant high. The space between these highs is what makes it relevant. And we want to use this high to continue lower, right? As you can see, this asset does not engage with that. But if you drop over to ES, it does engage with that to create a protected swing. So you kind of have to imagine it like this, where it manipulates that level. And this is going to be used to continue that 4-hour expansion candle to get down to these lows. So here we are on the 4-hour chart with this same example. And when we get these 4-hour closes that confirm the low of day, right? 4-hour swings confirm the low of day. That's GXT. You can mark out EQ, right? And when you look back inside these ranges, those key levels that form when the swing confirms the low of day out of the key level are typically going to be your refined key levels on the 4-hour time frame, right? So as you can see, I'm going to mark out EQ here. But honestly, we can do this because we're kind of closing back in the range a little bit. So really this area is fine. Let's drop down to the hourly. And as you guys can see, what happened here, we had that original swing formation. When we expanded away, What did we say was our refined key level now? Was this now, right? But this is also within the upper half of the previous 4-hour candles range. So this is simultaneously the refined invalidation for the daily candle to expand, but also the previous 4-hour candles range as well. So as you can see, this 4-hour candle opens low first, creates an SMT fill there with the only key level to reverse from, and expands, right? So when you put it all together, we have that daily expansion candle, right? Refined from our 4-hour key level, as you can see. And then we're trading 4-hour expansion candles within the daily expansion candle. And within the 4-hour expansion candle, we're trading hourly expansion candles from the previous 4-hour ranges, right? It's really a beautiful thing, mechanical across all of our timeframes. And yeah, now we're going to be using this same example. We're going to be talking about continuation and validation. This is essentially where price has already opened low and expanded within an expansion candle, and you're just trying to ride the expansion or the continuation. So here we're going to be covering a gap as our continuation and validation. So let's go ahead and drop down to lower time frame. So here we are on the hourly time frame. I'm going to go ahead and mark out the opening price of this 6 a.m. 4-hour candle. As you see, price opens low first. It puts in its low. Once it puts in the low, we start to expand away. It's already an expansion candle at this point. What do we create? A key level above the opening price. So if we're going to continue, we're going to continue from this key level here, which is that gap. So let's pay price. And as you can see, price uses this key level to get on side with the expansion, right? Because at one point, when this candle is retracing, it looks like it has a very, very large wick, right? But you can imagine that when we hit this key level, we fill that wick back in to close off as an expansion candle because we know expansion candles close near the highs.